Very good, Ed. Thank you very much. Let's get to Dan Genter, CEO and CIO at RNC Genter Capital Management. So, Dan, it seemed like the bond market had a little bit of trouble figuring things out today. If you look at the path of the 10-year in particular, trying to balance out the strong retail sales report with, I guess you have to say, an extremely dovish Fed when we look at the minutes. How do you play it?
Well, I think that you're right. I mean, what you're seeing is you're seeing forces that are really working against one another, at least from the standpoint of an econometrics analysis standpoint, where you've got retail sales that in some cases they're showing some strength, and then they're showing weaknesses in a number of areas. And I think you have to look at it and really dissect it, because the vast majority of the weakness that's there was still in the transportation and the leisure area. For example, airfare and hotel rates were down 28%. So that's pulling the entire averages down, where you actually saw some rebound actually in foodstuff prices. Certainly you saw it in some of the auto sales. And you're even seeing the other side of that, which is some of the CPI numbers that are coming out, to where even though they're very sanguine from an overall standpoint, housing is actually up 42%. Autos are up 15, though it's mainly used cars because there's a semiconductor shortage. But you're seeing a bump up in food and beverage, and healthcare is up 9%. So you're seeing some conflicting messages, which are understandable as we basically try to jumpstart the economy and move on about our way forward back to some normal existence.
Reports or fears of destabilizing inflation, as many people have been reporting or thinking and worrying about, greatly exaggerated?
Well, I think that they are. I mean, when you look at it overall, as I mentioned, you're going to have the real number that's really off the charts is looking at housing, and that's largely been due to migratory patterns that have been COVID-induced. The other numbers are fairly understandable, even looking at the autos, because I mentioned shortage in new cars, and healthcare is pretty understandable in this situation. And so when you look at it overall, though, I mean, this is an economy that definitely is trying to restart. I mean, you're seeing better numbers in unemployment, but then you're seeing, new unemployment claims that are still somewhat anemic with, what they represent. So it's very, very mixed. And so the Fed is also indicating that, we're not making any changes for the foreseeable future.
Yeah, that message came through pretty clear. It shouldn't have been too surprising. For those people, though, those investors who are worried about inflation and what it might bring out of the Fed if the market does lead the Fed, one of our guests on the show a couple of days ago, James Abate from Centerpoint, had an interesting counter, saying he didn't think the Fed would be aggressive. He thought they'd stay on hold, but he was concerned about corporate taxes going higher, and that coming from the Democrats. And the thing about that is that would not be maybe a sudden adjustment to asset prices, but it might play out because the corporates' profit margins would actually get squeezed there. Are you worried about higher taxes for the corporates and the impact on equities?
Well, we are. I mean, you're sitting in a situation right now that the equity market, for all practical purposes, is really, it's priced to perfection. It's priced certainly to a reopening to a large degree by the end of 2021. And you really just don't want anything that's going to bleed anything out of the economy, out of the recovery, and especially as it's going to bleed out of new hires. And so I think that we will see an increase in corporate rates, but it's going to come later. I think the administration is not going to put that yoke around corporations.
And I suppose you'd have to argue that the impact from it would be much later as well, so it wouldn't be felt so abruptly. Dan, hang on a minute. We're going to get a market update next. Dan Genter from RNC Genter Capital Management. This is Bloomberg.